US producer price inflation jumps to a 3-year high, which lifts US bond yields and the US dollar. So the Aussie and Kiwi dollars fall almost 1%. Australian jobs growth recovers and New Zealand house prices fall again. That's coming up in our 5 Things in 5 Minutes on Friday, August the 15th. And in our deep dive interview, ANZ FX analyst Felix has been looking at central bank currency holdings, including of the Aussie and Kiwi dollars.
Both those countries are very stable institutions, and then of course helps in the sense of developing financial market sophistication as well.
But first, in 5 and 5 with ANZ, data out overnight showed the US headline producer price index rose 0.9% in July from June, its fastest pace in 3 years. ANZ economist in London, Bunzi Madhavani, says the figures signalled a building up of inflation in the pipeline.
It remains to be seen whether the higher prices get absorbed at the level of wholesalers, retailers, or whether they get passed on to consumers. So consumer inflation prints in the coming month will be important to gauge that. For now, we assess the data push back against calls for a 50 basis point rate cut, but we don't think it takes away the 25 basis point rate cut expectation for September. Financial markets also saw some paring back of the outsized 50 basis point rate cut calls and are now pricing a very small probability of a hold at the Fed's September meeting. As a result, Treasury yields were higher on the day and the US dollar also rose.
As of 4 a.m. Sydney Melbourne time, the S&P 500 and the Nasdaq were down 0.1%. The accelerating producer price inflation saw the 10-year US Treasury yield rise 5 basis points to 4.29%. Because of those higher interest rates, gold was down 0.7% at $3,383 US an ounce. West Texas oil futures rose 2% to $63.90 US a barrel. The US dollar index also up with those interest rates, 0.5%. The Aussie dollar fell 0.8% to 64.93 US cents. And the Kiwi fell 1% to 59.16 US cents. Number 2, Australian jobs growth rebounded in July after weakness across May and June. As a result, the unemployment rate ticked down from 4.3% to 4.2%. ANZ economist Aaron Luck says it was a solid jobs data print.
Employment growth rebounded by 25,000 in July after a 3,000 decline in May and a pretty soft 1,000 increase in June. The employment rate also pulled back a little bit from 4.3% we saw in June back to 4.2% in July. And the results were broadly in line with our own expectations and market expectations as well. And I think it goes to show that the labour market is still pretty resilient despite of what happened in May and June.
Number 3. Aaron says the data came after a slight change in tone on the labour market from the Reserve Bank of Australia last week.
I think the labour market is generally tracking in line with RBA's expectations. They are probably pleased to see some of that easing in the labour market we saw last month in June. We did see the unemployment rate taking up to 4.3% last month. But the RBA did soften its tone about labour market tightness in its August post-meeting statement, just noting that labour market conditions remain a little tight compared to before they said it was tight.
Number 4. Aaron says there shouldn't be too much change in the labour market from here going into 2026.
Looking ahead, with things like forward orders picking up in recent months in our own ANZ Indeed Australian Job Ads series still pretty stable, we do think that the unemployment rate will only peak at 4.3% this year, and we think that it will slightly ease to 4.2% by the end of 2026.
Number 5. New Zealand house prices fell a seasonally adjusted 0.5% in July, according to the Real Estate Institute data. There was also a fall in June, interrupting price increases earlier in the year. Here's ANZ senior economist Matt Galt.
The housing market's been pretty soft over the last couple of months, which probably reflects the soft New Zealand economy over the last 3 or 4 months. We had house prices down 0.5% in the month, and that means house prices are only up 0.4% in total over the last 9 months from their last low point. So it paints a picture of a housing market that's going sort of sideways at best, and is a bit weaker than we had expected.
Matt Galt there. Now, in today's deep dive interview, ANZ FX analyst Felix looks at how global central banks have been diversifying their currency holdings, including towards the Aussie and Kiwi dollars in recent years.
The interesting story is that in the last little over 10 years, really, we've seen some diversification occurring in terms of those currency allocations. So the US dollar definitely is the dominant one when we look at the data, and that's not really changed at all in the last period of the data, essentially. But when we do look at the margins, there is some evidence that diversification is occurring. So what I mean by that is allocations to other currencies. So Aussie dollar has been one of those currencies, the Canadian dollar as well. So the sort of non-traditional choices maybe wouldn't be associated treated as a reserve currencies or something that would be in those reserves, but certainly it is the margins we see that growth there of other non-USD currencies really in the mix by central banks.
Yeah, so when central banks are thinking about this, they think, I'd like to diversify out of US dollar just a tiny wee bit. What are the sorts of things they have to think about when they do that to ensure that, they don't lose their shirts?
Well, look, it's a mix of things and does vary from central bank to central bank. But broadly, I suppose the inclusion of a currency within the reserves more generally, and again, in that sort of aggregate broad sense, does reflect, I guess, the importance of that currency as a unit of account, of its use in broader financial market transactions, use in trade, hence why the US dollar is so important and has such a large segment of the pie when we look at those reserves. But, in some cases, it can also just simply be a desire to diversify as well. And just keep a varied mix of currencies and assets in the reserve allocation too. So it can be different for each of those central banks. And broadly, it really does come down to those two, I suppose, desires.
Now, you've looked at three of the so-called G10 currencies in particular, the Australian dollar, the New Zealand dollar, and the Canadian dollar, which are among the 10 most traded currencies in the world. Why is it that Australia and New Zealand are in that top 10 as the world's most traded currencies when their economies probably aren't in the top 10?
Well, I think in a way it does come down to both those countries are very stable institutions, and then of course helps in the sense of developing financial market sophistication as well. It's important for, I guess, a currency when we think about it from the perspective of the inclusion in these reserves in terms of the data. So that's probably why we see the Aussie and Kiwi more so than, say, other sort of similarly sized currencies included within those reserves as well. I guess as well that affords a greater liquidity in terms of Aussie and Kiwi too. A lot of these reserves, their purpose is to be liquid reserves that are there on hand. And so that liquidity of those currencies is a very important feature for their inclusion too.
Can you tell us a bit more about these sort of non-government or non-sovereign bonds issued in these currencies that help make them perhaps a little bit more attractive as a reserve currency?
Yeah, I suppose that is a reflection again of the sort of financial market sophistication underlying the economy and the institutions behind particular currency. So, obviously when we look at the US dollar, very deep financial markets, not to mention bond markets, a lot of offshore issuance occurring within the US market. So naturally that sort of explains again the US dollar's prominence. But when we look at, again, comparing those three currencies, so Aussie, Kiwi and the Canadian dollar, we do see, there's been quite a popularity in terms of offshore issuance into the Aussie dollar market. And that does maybe sort of reflect, again, the attractiveness of maybe the Aussie market as a place of issuance. And again, sort of underlies the Aussie dollar's maybe inclusion within the sort of broader reserve aggregation when we think about things from that perspective really there too. So that's definitely sort of something that's maybe giving the Aussie a bit of an advantage, at least on a relative basis compared to the Kiwi and the CAD when it comes to, I guess, the outlook for the Aussie in terms of its inclusion within reserves going forward.
Felix Ryan there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Friday, August the 15th. Catch you next week as we get set for the Reserve Bank of New Zealand's next rate decision. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.